Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So as you know, the S&P 500 is hitting all-time highs, and two things can happen. It can continue to do what it's doing, and if that happens, I am going to dollar cost average every single week into this portfolio, the companies that I own. I'm looking for, just to add to the companies that I have, and if I find an opportunity, of course I will do the same. At the same time, the other thing that can happen is we could see a correction, which is about 20% from where we are right now. And if that happens, I would love to own, there's other companies that I have on my list that I would love to add to the portfolio to help the overall portfolio growth, inshallah, moving forward. And that's what I'm doing right now. So I'm doing a lot more research to find out the companies out there that could potentially make the portfolio better in terms of growth side of it, in terms of dividend side of it, moving forward. And I've looked at I'm looking at all the 11 sectors, and I'm going to pick companies that I think within those 11 sectors that could potentially be a good addition. So last video we talked about companies that are, the main drivers in terms of AI. And today's video we're going to talk about 5 companies in the cloud sector, or within technology. There are different subsectors, so this is one of them, and cloud is one of the main drivers when it comes to AI and so on. So I'm going to look at 5 different companies today that could potentially be a good addition. And again, this is just for entertainment purposes, but I'm also doing my own research and using this and sharing it with you guys. So if you're interested, of course, as always, do your own research and so on. If you like this type of content and you're getting basically value out of it, subscribe to the channel, and of course, open that notification so you don't miss when we post, as well as, of course, join us in the Patreon account where a lot of brothers are sharing, excellent practices. You can join the Discord and you can get access to all of these things, inshallah. Right, let's get started with the video. Like I said, we're focusing on high quality companies in the cloud sector. Again, there's so many of them out there, but some of them are very expensive. So I tried to kind of get ones that I feel like are not too expensive right now and potentially be a good addition. And the first company that we're looking at today is Docusign. This company has a over 10 billion market cap. It has a narrow economic moat, $50 per share right now. EPS right now 0.25, so it's a positive, which is quite good. PE is quite high, to over 200. Forward PE, we're looking about 17, which is again really good, and PEG ratio of just above 1. Again, that's really good. In terms of profitability, they do have a little bit, but it's not much there, and current ratio is just below 1. Free cash flow 751 million, and until total return the last 5 years, that is, for this company, I think it's last 3 years, is negative right now. Growth estimate for next year is basically almost non-existent, and the growth estimate for the next 5 years, this is according to Yahoo Finance. I'll show you what Seeking Alpha is saying. 20% every single year for the next 5 years, 32% discount right now, 74 US dollars is where they think the price should be. Now, looking at the revenue side of it, this is what surprised me about this company. By the way, the company does a lot of the basically, if you buy a property, if you buy things like that online, what the company does is basically you sign the document online and just send it. And this is one of the darlings of 2020, where everybody was locked away. They did all the digital signatures and certificates and all of that stuff, so you can easily identify who you are and sign the contract, and it actually becomes a binding contract. So the annual revenue side of it, from 700 million to, in 2023, $2.52 billion. That's absolutely huge. And then for basically a small company like this, and then next year they're expecting 2.75, the year after 2.91. If we look at the annualized and take out the estimates, as you can see, from 0.09 of EPS to right now to over $2 per share. And if we look at the next year, they basically right now we're looking about $2, and the next year $2.87, which is quite nice. So in terms of expectations for moving forward in terms of growth side of things, if we look at the estimates, basically when it comes to 2024, so we're already in 2024, that's why this is the zero bit that we saw. Okay, so 2025, that was for 2025. For 2024, we're expecting about 41%, then 0, and then 9%, then 3%, 17%, and so on. If you just focus on the first 3, so amazing year, not great, and then bouncing back 9% after that. And then when it comes to revenue, 9%, 5%, 7%, 2%. So the revenue is growing, but the EPS is actually kind of not growing as much. Right, next company we're looking at is ServiceNow. This is very similar to Salesforce. And they do help a lot of small businesses to take care of their customers and so on. Right now, they have 157 billion market cap, wide economic mode 765 in terms of price wise. EPS $8.42, and PE right now is 90, forward PE 58, PEG ratio of 2.97. Profit margin 19%, return on equity 27%, return on invested capital 8%, and current ratio above 1, which is nice. $2.7 billion of free cash flow right now, and 27%, almost 25 and 8% growth in the last 10 years, and then 21% growth estimate for the next year, and then basically 5 years after that is about 21% as well. Fairly valued right now, $770 per share is where they think the price should be. Again, looking at the company details, okay, as you can pause the video and have a look at it, but the company operates the Now platform for end-to-end digital transformation, artificial intelligence, machine learning, robotic process automation, process mining, and so on, so. So they are in every single buzzword you can think of. They are in there. Now, if we take the estimates if we just look at this, okay, and take out the revenue estimate, you can see 3.4 to right now 8.9, almost $9 billion, which is quite nice. It's nicely growing. So right now 8.97, next year 10.9, the following year about 13.14, which is quite nice. Then if we do the same thing as well here, okay, you can see the actual was $10.78, and then the following year they're expecting 13, and then about 15, almost to 16 after that, which is quite nice. Now, if we look at the estimation for this company in terms of earnings side of things, okay, revenue 21, almost 22%, 22, 23, and if you just focus on the first three, and then 21, 20, 21, 17, and so on. So again, it's growing really nicely. It's a great company. It seems fairly valued right now. Another great company to look at if you're doing a bit more research. The next one is one I own in the portfolio, and this is Intuit. This is the company that own QuickBooks, so they help a lot of people with small businesses, individuals with their accounting side of things. So if you own a business, of course, you have to do accounting and so on. And in the US, you have to use their product. You don't have to, but they are the main company when it comes to it. They have a wide 184 billion market cap, wide economic mode, $655 per share right now, EPS over $9 right now, 71 PE, and the forward PE is about 40 right now, PEG ratio above 2, profit margin 17%, return on equity 15%, and return on invested capital of 14%. So in terms of profitability, they seem really good. Current ratio is above 1, which is nice. $4.3 billion free cash flow right now. 25% total return the last 10 years, which is absolutely huge. They're expecting the earnings to grow by 15% next year, then 15% every year after that. 31% premium right now. $500 per share is where they think the price should be. If we look at their revenue side of it, if we take the estimates and just focus on this, as you can see, from $6.7 billion to right now 14.37 for over $14 billion, which is absolutely huge if you think about it. And then looking at the annualized EPS or earnings per share, you can see $6.75 to right now 14.4. And then if we look at the estimation next year, they're expecting about 16. So right now we're looking at about 14, next year 16, and then the year after $18.08, which is absolutely huge. If we go back and just to have a quick look in terms of estimation for moving forward, you can see almost 14% or 15%, 15%, 17%, and so on in terms of EPS growth, 12%, 12%, 12% again, 13%. So absolutely fine, double-digit growth every single year moving forward, which is absolutely wonderful to see. But right now, it's slightly expensive. In fact, let's just go on ratings and see what it says. Wall Street, as always, is saying is a buy. How many buys? So we have 14 strong buys, 6 buys, 7 holds, and so on. And right now, it's a flat. Okay. And for me, it's definitely a hold right now. I wouldn't actually sell it. I will hold on to the company because it's a great company, but it's too expensive for me right now. Next one is Paycom Software, another company. We've never actually spoken about this company. It has a market cap of $10.8 billion. It has a narrow economic more, $190 per share right now. EPS right now $5.88, 32 PE, forward PE of 24, PEG ratio below 2, profit margin 20%, return on equity 27%, and return on invested capital 30%, which is really good. Current ratio is above 1. They have less than $1 billion, well, just about 300 million in terms of free cash flow. At least they do have some free cash flow. The next is the PEG ratio in terms of total return in the last 10 years. We look at that, it's not actually last 10 years, I think it's the last 3 years or 5 years. It's about 1%, so not massive return. I think it's one of the companies that went up to the moon and then came back and hasn't actually done anything since. Growth estimate 14%, growth estimate for the next year about 11%, 27% discounted right now, $260 per share is where they think the price should be. And this is what the company does. So it provides cloud-based to human capital management solution is delivered as a software as a service, small mid-sized companies in the United States, and then they offer a lot of other things. And if we look at the revenue side of it, if we take the estimates, as you can see, from 735 million to right now $1.7 billion, which is quite nice to see. And then they're expecting that to continue, 1.87 to over $2 billion. And then if we look at this, you can also see, take out the estimates, you also head in the right direction, which is absolutely wonderful to see. And if we look at it, basically this year, $7.75, the next year $7.74, the next one $8.87, which is not bad at all. In terms of growth side of things, okay, this is where the company is. So 0 next this year, the double digit, then double digit the following year, and then double digits in terms of revenue side of things. All right, but look at the ratings here. We've got Quant, which is actually saying it's a sold, Wall Street is actually hold, and Seeking Alpha is actually saying a buy. So if we look at Wall Street, for example, it's about 6% upside from where we are right now. And the final company we're going to talk about today is Snowflake. Again, this is the company that it's weird because Warren Buffett actually owns this quite a bit of this company, which is interesting because normally they don't actually, he doesn't touch anything to do with, especially with small technology companies. But 75.8 billion market cap, and it has none basically in terms of economic mode, $230 per share right now. EPS is still negative. It doesn't have a PE, of course, because we have no earnings side of it, so the EBIT is actually non-existent. But moving forward, we have a PE of 212. Okay, PEG ratio above 3, which is again means it's expensive to me. Profit margin, of course, return on equity and return on invested capital non-existent because this company does not have any earnings yet. It doesn't have any profits. Current ratio above 1, which is fine. They have some free cash flow that they can use. It hasn't got any return because it's actually gone down so much since actually started the company. Growth estimate, I think it became public in 2020 or 2021. Growth estimate next year is about 41%, and then after that 67% every year moving forward, which is absolutely ridiculous. According to Morningstar, they're saying its value right now $231 per share is where they think the price should be. Right now it's about 230. And as you can see here, this is what the company does. It provides cloud-based data platform for various organizations in the United States and international. Now, if we look at the revenue side of it, as you can see, if we take out the estimates again from 96 million to right now $2 billion, over $2 billion, and they're expecting that to grow, which is absolutely huge. So next year, almost 2.8, then year after $3.63 billion. In terms of EPS, if you take the estimates, almost non-existent. But if we add the estimates, you can see it's expecting to carry on with this positive side of things. So in 2025, they're expecting EPS of $1.13. Now, if we look at the earnings moving forward, okay, you could see this year in 2024, they're expecting basically 219, then 42%, then 50%, 56%, and so on. So if you just focus on the first 3 here, And then if we look at the revenue side of it, 35%, 30%, 30%, 35%, which is absolutely huge. Now ratings is where it's interesting. So Quant is actually saying and seeking alpha both is a hold. Wall Street, as always, is actually saying it's a buy, but it's flat as well, so nothing huge to worry about there. So there you have it. That's the 5 companies I wanted to share with you guys today. I own this one. I'll show you exactly how much of this company I own. I do own in the family portfolio as well as here. So that's the 5 shares that I own of this company. Now, if we go back from Sharia compliance side of things, you can pause the video and have a look at. As always, of course, this is just for entertainment purposes. So always please do your research. I don't think this is right, by the way. Let me just double check. Oh, it's just a mistake, 1 point. There you have it. So you can pause the video and have a look at that if you're interested. But as always, like I said to you guys, always do your own research. Always, do what you need to do. And like I said to you at the beginning, I'm only looking at these companies just in case anything happens. And of course, if the market crashes today, what companies do I want to own that I can actually add it to my watch list and keep watching? Right now, I really like these 2. Okay, so these 2 seem very interesting. I don't think this company is going to exist for a long time because I keep saying someone is going to buy this company at some point. Maybe Adobe or some other company will come and get it, or even Microsoft or some other company. But right now, because it's only $10 billion, but right now, these are the 2 that I'll definitely be interested if I was to, especially Intuit. Okay, this is I do own quite a bit of this company. Well, shares of this company, so inshallah I'll continue doing that, and I'll continue sharing with you guys what I'm doing. If you can join us in the Patreon account, like I said at the beginning, that would be really helpful for the channel and everybody else. Have a wonderful day. Assalamu Alaikum.